duty drawback, again this is on the input side. Again, it depends on while calculated based on the output, but mostly whatever customs duty we pay on the goods inputs basically. So there are two types of drawbacks. Yeah, before going to it, drawback is nothing but whatever customs duty you pay at the time of import, there is an option to claim refund of it if you export it. Okay, so then there are two types of drawbacks. One is under section 74, which is basically if you are exporting the same product again. You have imported XYZ product and if you are exporting it again. So it may happen typically, suppose if these goods have come for testing purposes, or you have genuinely purchased but there is a deficiency in it, therefore you have to return it. Or it may be for R&D purpose, it may be for whatever purpose, but the goods which have come, they are going as it is without any change. So as far as customs is concerned, whatever comes into India is import, therefore you pay customs. Whether sale has happened or not, it doesn't matter for customs. So therefore, even if you are imported for job work purpose or for testing, R&D, whatever purpose, you will have to pay customs duty. When you, assuming you are exporting the same product again after your intended purpose, so then you can, initially you have paid it, so therefore since these goods are being exported, I should not be penalized. So therefore there is an option to claim it as a refund. Okay, so we will get a refund up to 98% of whatever we have paid at the time of import, if it is re-exported as it is without making any changes in it. And that 98% varies based on the time period. If we are exporting within 6 months, there is some percentage. I think maximum period is up to 18 months. So 0 to 3, 3 to 6, 6 to 9 months, etc. So up to 18 months we will get a refund. After 18 months there is no refund option. So therefore, if there is a issue with the products which have been imported, that have to be re-exported within that timeline to avail this benefit. The second thing is a drawback under section 75, which is the typical manufacturing exports. So we import raw material and then we use it in the manufacturing and then we export the finished goods. So the raw material, whenever we import, we will have to pay something called as BCD, Basic Customs Duty, cess and IGST. IGST anyways you get credit, we utilize in the GST returns, etc. BCD and the cess is something we don't get credit today. So therefore it's a cost. So it is world over. Every country, whatever customs duty they collect, that's how it is. Nobody gets a credit. Okay, so since we are utilizing it for manufacture of export products, that portion can be claimed as refund. Okay, so it provides for BCD and customs duty. In the first category, which is the re-export as it is, so there we will get all of it, BCD, cess and IGST, whereas in this we get only BCD and cess because IGST anyways we are taking as well, and that we will get under the GST law. That is a separate provision for it. Yeah. So if these goods are exported as it is, we will get about 98%, and then the key condition is that the IGST credit should not have been claimed. Since we are claiming IGST credit also, IGST also as refund, we should not have claimed it. If we have claimed it, then ideally we should reverse it. Okay. And then the process is similar to the how to claim this. The process is similar to RODTP script. We will have to select a box in the shipping bill or bill of export at the time of export, and then we will have to file a separate application. Like in RODTP, there is no application separately. Here we will have to, for this for duty drawback on goods which are exported as it is without any change. So for that we have to file a specific application which will be looked into, and then it will be processed. It should typically take 6 to 9 months. It may be more also, but that's the situation. Then coming to with respect to customs duty drawback with respect to the manufactured goods. So So whatever customs duty we have paid on raw material which went into the finished goods, and then those finished goods are exported, will get duty drawback. There are three types of drawbacks there. One is all industry rate, which is the generic rate, like the RODD rate, which is determined by the Ministry of Commerce for across industries. Depending upon the product involved, they will determine it, and then that rate will be applied. We will get it as a refund, cash refund in the account. Okay, so then that is called all industry rate, which is generic rate. No need to make any specific application. We select drawback option in the shipping bill, then we get it as credit in our bank account in a month or so. Then this is like the first one, which is applicable for everybody. There is second thing called brand rate. When for certain products, if the all industry rate is not notified, then we'll have to make a specific application saying my product is not covered under all industry rate, therefore please look into it and then determine what is my drawback. So here there will be a lot of heavy lifting wherein we'll have to give again like the RODTP return, we'll have to give details of what is my customs duty cost, BCD cost, which went into the value of export goods. So the maintenance of the cost records in this case also is important. If the product is not getting covered, then we'll have to make that application with that information. Like obviously without that information, they may not be in a position to process it. And the timeline for it is 3 months. So within 3 months from the date of export, we'll have to file an application wherein it will be looked into and then it will be implemented. The next one is the special brand rate, which is that in case our product is covered under all industry rate, but in our specific fact pattern, we are not able to recoup all the customs duty. So if it is say less than 80% of, say we have incurred a customs BCD of say 1 crore rupees, based on the duty drawback, I am getting only 50 lakhs. If I apply the percentage on the export value, I am not even getting 50 lakhs while I have incurred 1 crore as customs duty on the raw material which is used for manufacturing. So in that case, we can make a specific application saying the all industry rate, which is the generic rate, is not helping me, therefore we'll have to look at it separately and then you have to decide based on my facts. Okay, so again here also we'll have to make a separate application which will be looked into and then will be decided. Typically again this also will take up to 6 months to 1 year, so that's how that's the pace at which customs work, but that's the situation today. And if somebody's export is a EOU or SEZ and they are exporting the goods, for them duty drawback is not applicable because typically they are not paying customs duty only. So therefore for them it is not applicable. And one key condition is that like implied point is that if somebody is only not a EOU or SEZ but a DTA, domestic tariff area, that is the word which is used. If somebody doesn't have any specific registration as EOU or SEZ, even if they are not importing any raw material per se, suppose if I am a manufacturer, I myself am not importing, but my supplier is importing. So therefore, he is not doing social service, he will include customs duty also and sell it to me. So the fundamental point here is that in my export product, if the customs duty is included, I will get duty drawback. Whether it doesn't mean that it has to go from my pocket. In the whole supply chain, if it is included, then I should be eligible for it. So that's why the rates are determined based on a particular HSN. Suppose if it is steel, then you will get so much of drawback. Everybody knows that India is not steel sufficient, it has to come outside India. Same petroleum. So most of the products, that's the situation. Okay, so that's one of the important point for this. So even if we don't import ourselves, if the supplier is importing, we can still claim the drawback as long as it is.
For claiming, do we need to submit that we have imported certain goods from China? So
no. So if it is getting covered under all industry rate, so the only thing we have to do is in the shipping bill, check that option, then rest will be taken care by them.
Even if the custom duty has not been paid on the raw material, suppose, but the tariff rate is there.
Okay. Tariff
You are
rate.
saying it is covered under the industry rate.
Correct.
Suppose there is 5%,
Hmm.
and the goods you manufacture through the raw material domestic purchases,
Hmm.
procurement from the domestic sources.
Hmm.
No duty was paid on the custom,
Hmm.
but still it is covered under HSM code.
Yeah.
So will you get the this?
Yeah. If our HSN is covered under the all industry rate, then we'll get that duty drawback benefit. It might have so happened that you might not, the supplier, the exporter might not have imported directly.
No,
His supply.
even if that material procures totally from the domestic, no where it was imported from anywhere throughout the supply chain.
No, if it is covered in the all industry rate, maybe if it is a say homegrown product, then it might not be covered in all industry rate also. Okay, say if say there is a raw material which is available only in the country, so that, and then that is used in a finished product, that may not get covered in the all industry rate. In the back end they might have done that analysis, but we as exporter, we just have to see the all industry rate. If our export product is getting covered under that list, then we are eligible. So the exercise whether the exporter of this product is using imported material or not is done by the government. So there is no responsibility on our side that okay, we have actually used imported raw material.
So again, classification becomes very important.
Classification of the output. Yeah, the
Exporting
yeah.
product classification.
Correct.
Correct HSM code.
Yes, that becomes very important. In case, again, they do have mechanism for it. There is something called as RMS, Risk Management System. So based on the description, if we are declaring, majority of the cases, if we are declaring incorrect HSN, they do have mechanism to track it. And if it is not getting tracked at the time of export, if they track it later, then there will be a penalty, etc. for wrongfully claiming. So that thing is there. Sorry, I can't hear it. See the idea. Understood. So see the objective of this scheme is that whatever customs duty which got incorporated in the value of export products, so that should be compensated. You cannot export taxes, you export only goods. So don't include tax value in the goods. So that's the whole agenda of getting refunds under the indirect taxes. So in this specific case, if nobody, if that product has not suffered any customs duty, then that might not get covered under all industry rate. All industry rate is a very big list. HSN wise.
Suppose it is covered.
Now, if it is covered, then we can claim. As such, there is no restriction in the law that for claiming you should actually have paid it. That condition is not there. The only thing is your product is getting covered under EIR, we can claim it.
Thank you.
Thank you. And other ineligible category is if there is negative value addition. So in some cases it may so happen if it is between say group companies, there is negative value addition, meaning there is no profit. So they have imported that they are selling at a loss for whatever reason. In that case, we will not get duty drawback. In case of manufacturing goods. And similar to RODTEP, the condition also here is that we have to realize we will get the drawback immediately within a month or so, but we have to realize it, the forex within 9 months of FEMA tender. If we don't, then again same thing, recovery proceedings may get initiated.